Hi everybody, Nick McDonald speaking. Thank you for joining us for this week's video on the US dollar index and currency markets. Firstly, just looking at the dollar index here, the market as I speak on the dollar index is not open for trading. So you can see that the charts here haven't moved. But if we just change this for a second to say euro dollar, what we're going to see is the spot markets open up a little bit earlier. We had about a 1% gap up on euro dollar today. Coming and looking at this on a 15-minute chart, you can see it a little bit more clearly. Gapped up, we've actually pulled back a little bit into, partially closing that gap now. If we go and look at dollar Swiss, our closest correlated pair to the dollar index, you can see a bit of a gap down from Friday's closes here as well. Friday's close there, we've gapped down. You see it much better on the 15-minute chart here. We closed up here on Friday and now we've gapped downwards, and actually we're still moving downwards a little bit there. So what does this mean for the dollar index? If we just come back and put this into some perspective on the dollar index chart, if the market opened right now, we'd be expecting it to open around about 1% down based on what those spot currencies are doing. So that would put us down, having closed around 74.80, that'd be putting us down somewhere around about, say, 74.30-ish, somewhere down around this kind of region. So in the scale of things, that's not a terribly huge gap, but certainly it does look, like there's some possibility of a gap down somewhere between where we closed on Friday and that kind of level. And therefore, we're seeing, based on the ratings downgrade that came out on Friday, we're seeing some negative impact here on the US dollar in early trading this week. So what does this mean overall? First things first, that's early trading. I'm talking here when the spot currency markets have been open for about 30 minutes, where the US markets haven't even opened up yet, where most people in America, it's still Sunday night. In the UK and in Britain, it's also the middle of the night. So it is, the major centres in the world haven't even really opened up yet. The trading, the whole news hasn't really been digested. So anything can still happen. That little gap down on the open doesn't mean that much, other than the initial impact of it is negative for the US dollar. For me, it doesn't change too much on the charts. I've seen that impact now. I've seen the gap. I've seen it hasn't been a wild one. It's been bigger than usual, but it hasn't been huge. So what does it mean? Well, the US has been downgraded. I don't follow too much of the news. I don't follow too much about what I think should happen. I look at what is happening. And certainly the initial impact, like we've just assessed, has been bad. But overall, when I come and look at these charts, it hasn't changed anything on these charts. And on the monthly chart, this is looking bearish for any breakdown below these previous lows here. So last month's candle is a very, very bearish candle, as was the month before that. If we can break down through these lows, and in fact this line should just be drawn a little bit lower here, if we can break down through last month's low, and let's just get the exact low, 73.58, any breakdown through there is going to be looking very bearish. The real key number through here is 7400. Any break below 74 will be bearish. Any break down below that previous month's low will be really confirming the bearishness. That will be having the US dollar starting to look like going much, much lower. The monthly chart, though, is actually the most bearish of them all at the moment. And that's a kind of a bigger picture view for now, and it's only bearish if it breaks down through those levels. If it breaks up, then it's completely invalidated what I've just said. Looking at the weekly, though, this is the chart now where for quite a while I've been assessing it, and looking at the fact there's been no trend, and then we start to break down. But we've also, if we look at the most recent high, comparing high with high, we made a higher high, and we made a lower low. So we've just gone from one type of no trend, where we're making lower highs and higher lows, meaning there was no clear trend, to suddenly making higher high and lower low, which still means there's no clear trend. It's an erratic, volatile market. There's no clear direction on that weekly chart. So while the monthly is pointing to down, the weekly is not really giving us much help at all, other than to show the key levels. And one of those key levels here is clearly 7400, where price has been bouncing off it. That gives us a place to be watching for intraday trades. 7400 being a key level to be watching. On the upside, and let's just remove this old line and just take it up to 76. On the upside, we've got 7600, which is major, major, major level. So what this does do, while not giving us clear direction, it gives us some pretty good trading zones. Anywhere down around 7400, and anywhere up above 76. These are good zones where there's likely to be good intraday trading opportunities around them. And that's my real key theme for this week, until I see a clear break in either direction. And we really need to see a good break now, because we've had some little breaks and it hasn't held. I want to see a really good break up, probably above 77 and pushing on, or a good break down below 74 and then down below these previous lows, so even 73.30. We need to see a good break and a clean break in one of those directions to get some real direction going on the US dollar. Until we see that, we're stuck in this range. We've been in it for quite a while now. I'll be looking for plays between 74 and 76. Let's come and look at how this translates to the daily chart. I've got those lines marked in there at 74 and 76. You can see as well that 74 zone is actually, from 74 down to say about a little bit lower, where we've got these previous lows through here. So it's around about a 20-25 point zone where we've been finding support and resistance in there. But you can see that we've had some good support as we came down and rejected it, came and bounced off it, came and bounced off it again. So already just 3 bounces there in recent times. And there's been multiple ones which I've shown many times in the past and talked about many times on 76 on the upside. But certainly I'll just be watching both of these, watching 76 on the upside, looking for any opportunity as we get there. I have one key factor: as soon as we're there, we're at major resistance. Then I just need to wait for the candles and the trend to turn around and to give me a reason to be taking a short trade. If that never happens, I'll never take a short at 76. But if it does happen, then I'll be looking to short at 7600. Equally, if it comes down to 74 and the candles and the trend start to show signs of turning around, start to show me the market turning bullish as we get to 74, then I'll look for reasons to be taking long trades off that. At the moment, that is the situation in the market. We are stuck in a range, and I'll be looking at range bound strategies such as that for the rest of this week and until we see any clean breakout of there. Hope that helps everybody. Happy trading, and speak to you next week.